Anand Shah is with us, Deputy CEO and Head of Investments at BNP Paribas Mutual Fund. Anand, hi, good afternoon. Your thoughts on what has happened in the mid-cap space over the last, say, 2 or 3 weeks? Is this just a technical issue, or are you sensing something big here?
Hi Anuj. No, frankly, the markets have recovered, and we have seen a little bit of, from the pessimism which was set into the markets, especially in February and March, particularly for mid caps and small caps, where we saw a significant sell-off. I think markets sort of trying to stabilize. Also, particularly for mid caps and small caps, where we saw a significant sell-off. I think markets sort of trying to stabilize. Also into the earnings seasons, I think it's mixed bag. I won't say it was out and out a very good set of results generally, but frankly, if you remove the corporate banks where the NPAs remains an issue, I think all in all the results season has been also been extremely good. So I think result seasons generally tends to be that sort of landmark, or that sort of checking point for the markets and the stocks. And obviously we are seeing specific movements in stocks and in sectors where we are seeing that the tide has turned, the base effect of Demon and base effect of GST been sort of behind us. So I think this is the right time. Market will segregate between the winners in the economy versus the ones which will continue to struggle.
Anand, hi, good afternoon. I'm looking at your mid-cap fund right now, and it's got a very interesting composition because two big sectors, consumer non-durables, have about a 17% weightage, and NBFCs have about a 15% weightage. Both of these pockets in the fourth quarter season have done reasonably well. Companies have not disappointed, numbers are good. Bajaj Finance case in point today. But from a positional standpoint, from here onwards, where do you think the risk return will be favorable? Because while consumers have had a far more measured reaction to good earnings, numbers like Shriram Transport, Bajaj today, or even Cholamandalam for that matter, they have been very well received by the market in the form of further price appreciation.
Sure. So, frankly, if you see within the mid-cap space, again, we have sort of, a lot of bias towards manufacturing. Something which, has been sort of missed by the market significantly is, since 2013, China has embarked upon this journey of clamp down on pollution. And everybody knows that for a manufacturing sector as a whole, globally there was stress coming in from China with enormous capacities coming on stream. Now that's turning tide. We can see over the last 12 months where we have seen specific commodities, specific set of companies actually benefiting as there is a pollution clampdown in China, where they are shutting 30-40% of capacities in specific sectors like chemicals and metals and other space. So I think that's one space which we continue to like, and that also forms a little bit of consumer non-durables that we own. Apart from auto ancillaries and specifically in B2C businesses like media and entertainment. The other space which you spoke about, NBFCs, I think it's again going to be mixed bag. We will have to look at the franchise one, your ability, because the interest rates have turned for sure. While today is not the day when you would want to caution markets, but very clearly crude is something which we are keeping an eye on. Interest rates are moving in the opposite direction, and that's where if you have your ALMs not in line, frankly, we will have pressure. So if you see before the result season, NBFCs in particular generally were in stress. I think we'll have to be very, very, selective in our NBFC picks also.
Okay, but that's